Hello, everyone. How are you? It's my great hope everyone is doing fine. This is the market recap as I've been promised you on my Instagram account that due to have the biggest drawdown since this year have started. I promise that I will prepare the market recap to know where we did a mistake from like 4 of the pairs that took us on stop loss today's or this week. So here I'm going to analyze it on how to see where we have did wrongs. So it can't happen on the future. It can't happen on the future. So one of the pair that we took with a premium member, it was this Euro USD. It was this Euro USD. So I'm going to find my setup as I shared it. I remember I shared this trade on last week at the first entry. Then this week also we had a second entry. So I'm going to analyze how it was since the first time I shared it on my on our premium signal on our premium signal. So last week the setup was before this. Before this, we had the first setup, which this one was not here before. Let me remove the things. So while I shared last year, our first entry was here. Let me remove this. Our first entry was here. I called the trade while the price was at these levels, and our target was supposed to be at the highest point in this 4-hour chart. Then our stop loss was below this 40 to it was 60 pips. So the stop loss, it was 60 pips. Then our target was supposed to be 270 plus pips. So the reason we took these trades, it was on the daily time frame. On the daily time frame, we saw that after price reaching the demand zone, price created the engulfing candlestick pattern. Price created engulfing candlestick pattern. As we saw here, it says a bullish to tell us that a bullish have show attempt to enter in the markets this area. So it shows bullish have showed attempt to enter in this price. So as I've been telling those premium members how to trade the engulfing candlestick, that is it is on my course. For those who have been in my course, they have already known how to trade this engulfing candlestick. So we waited for the 40% to 75% retracement of one daily engulfing so we can get an entry. So when we drop to the 4-hour time frame, we see that the price came all the way to that regions, came all the way to that 40% to 75% of daily engulfing. So after that, it's where I call this trade at first. So let's see what's happening. I call the trade. So first of all, market goes down, keep us on the consolidation this area because there is no volatility. Then after like 2 days, the market went up. As we see, the market went up like this way. So after having this already, I just because I give the updates in every morning. So I just give them like we had the latest higher. Then we come to get the we get to come the the latest lower here. So after getting the lower, it means the market went all the way up to find another higher. So let's see how it was going. So we see here the market what is doing. The market find, markets managed to find, market managed to find the newest higher, which is this one. Market managed to find new higher points, and then market come all the way down to find the higher low, which is this one. After this is the period where I told people to break even this trade, because we've already get the perfect, bullish structure. As we've seen here, it's a low price, then higher, higher low, higher, then higher low comes here. After then, these areas, it can look at the minor as a minor zone. Like we're seeing here, the price managed to break this with a very momentum candlestick, come to retrace, go up, but the momentum was not at that level. Try to come down, but bearish have been rejected, as we see here. So after the price printed this bullish candle, I told people, actually at this level, I told people we should re-enter again this week. We should re-enter again this week. So we took another entry here on Euro USD. Our target was above here. This second entry target, it was 220 pips, while the first entry, the target was 270 pips. So let's see what's happening after. So as you see, what's happening here is that for the people who have been monitoring trades, after what have been shown here, the price was trying to tell us. You can see how the market was moving from this area, It was a nice story from the price to tell us that what you are trying to trade here, it's a correction. What you are trying to trade here, it's a correction. It's okay, we want to buy, but this buying, it's a correction. Because if you come to just looking this momentum from this area up to this area, the time that have been moved, okay, the market started here, it was April 20, and it reached here. Well, when market was here, it was at March 28th, then I reached here at 6 April. So it used almost 1 week to move from this area up to this area. Then from this area, it was 6 April until now, it was almost 14 April. So almost 2 weeks market used to move this. And when you just try to compare the movement from this, the kind of movement from this area, it is very sharp to show this is impulse move, and this is a correction movement. So while we tried, when we are trying to trade this correction, we had to be very careful on where we are going to take our take profits, in order to be not quoted when the new impulse comes in, when the new impulse comes in. So this is what's happening actually. If you want to, if you have read those candlestick pattern, you know this. What is happening here is just a bearish flag, as it is. It was just a bearish flag like here. But also, being honestly, the market meet this minor supply level here. And this is not like the way we analyzed it on the market as it is. It is not as we analyzed it on the market as it is. So when we come to look at this USD, there is a people I also telling my clients on how to use the sentimental analysis on how other people's may looking the price. So as we see here, the other people have been waiting this price to reach at this level so they can take also an entry. So if we take a Fibonacci by measuring the impulse for where it have been come and retested, we see this retracement have come all the way near 50% to 61%, 50% to 61%, where it's a golden area. These areas are golden areas for the markets to finish the retracement phase. This is the very golden level for the Fibonacci for the price to finish the correction wave. So the result, because this is our second entry, our stop loss was here, and the first entry, our break even was here. So what's happening? Markets come all the way down. As we see, market come all the way down and hit our stop loss for their second entry, hit our break even for the first entry. So it's like we get the loss of eight pips. I mean, this entry took here. I remember, because the stop loss was 80 pips. So the second entry took here after this bullish attempt. I called the trade, then market retraced somehow, and also market going all the way up. Market going all the way up. Okay, so that was Euro USD. How we ended up losing these trades, it's because we had not been enough concentrated on how the price is trying to do. As I see now, this price have been in the last 8 hours before. I mean, the last 12 hours, we have seen the very strong movement to the downside, which when we go into the daily time frame, if we go to the daily time frame, we are going to have an engulfing candle or an bullish run. So if until the end of the day the market comes all the way at this down, it means we are going to have an engulfing candle. So we'll use also the 40% to 75% to know how can we join the sellers again. After that, we have lose this bullish momentum. So this is how we lose on Euro USD. Another trade that we lose today, it was GBP card. So I went to 4 hours. This trade we took on 2 hours time frame. First of all, I come to the 4 hours. Then I measure this. Fibonacci retracement here up to this level down here. So between this 50 and 61%, it was area that we know that this area, it has price, it's a golden price, it's a golden level where the price is going to retest, so as we can join again sellers. So while we had this scenario, the market was at this level, if I'm not mistaken. Then we went to 2 hours. Okay, it was at 4 hours time frame. Then we went to. So we show that the sellers were in. After this, the sellers entering in. Okay, when the market was there, it's where I call the trades. Yeah, it's these areas. By knowing that the market is at 50 to 61% Fibonacci retracement, which is by price action, we are very correct. As we see this area also, it showed the liquidity. The price, whatever it touch here, seller seems to enter in the market. So for us, I call these trades and stop loss. I give the stop loss to be above this level, because I've seen also the first attempt below this, the attempt of sellers to break this supply regions or these liquidity regions. The movement of sellers started here. So by knowing that, I said that there is a great potential that buyers may trying to test this region again by coming all the way to this place where the bears movement have started before wenting down. So we put stop loss a few pips above, which are the stop loss, it was 130, yes, 130 pips. So that we cannot get the stop hunt if it will happen. We can never get a stop hunt if it will happen. So what's happening is just the price come all the way up. Bulls show the kick in with a great momentum, and later on we lose these trades. So by the way, even if it was the losing trade, but the whole mistake that we did is just we risk a lot of pips on this trade. We risk a lot of pips in this trade. So the mistake which we did, it was we could measure this Fibonacci retracement. As I said before, we could measure this Fibonacci retracement, but to avoid stop hunts, we were supposed to enter our trade on 71%, as I explained to those premium group members, as I explained to them on them. So the great reason why we're supposed to enter at 71% is just we want to be the latest people to enter on the market, so as to increase the risk of the trade we took. But also it will give us more potential, or more reward than people who entered on the market early. So this entry, it was very aggressive. So if this trade it was not be losing, we could lose this trade by stop hunting up to this level, then the market could come down. But until later on, still the bulls was in. And if we just come to look at the yesterday candlestick, okay, because when I called this trade, it was before this yesterday candlestick. I want to show you also the reason why I called this trade. Because when I called this trade this yesterday candlestick, and today it was not there. So if you come to analyze before, you see how many attempts of sellers have been shown up in this region. Whatever price trying to reach this region, the sellers have been rejected. So that's why the day before, yesterday, it gives me more confidence to call this trade at this level, because I knew that whatever price tap this area, sellers are bears are enters in. But it's happening to be different, because like yesterday, after entering these trades, we caught the very strong bullish candlestick until today, and we see that the price come all the way up. So if we want to put again the Fibonacci tools, we'll see that the sellers started to move the market from here, come all the way down here, and now the market, it is within this area 71, where I said if we want to enter, we enter this area, because it shows that we want to be the latest people to enter on the trade, as we minimize the risk, but also we get the great reward at the end of the day. So we're still looking for this. We are still looking for this GBP card to see what is going to happen this area on daily time frame, and that it will be based with a daily closing. So if today this trade is going to leave a week here, it means it will give a more closure, or it give more story about price action on lower time frame, and we'll think about re-entering it again. So it's still valid for the bears bias, but we have to monitor it until we get the proper entries, which will be supported by the price action. So this is how we took the wrong decisions, early entry, aggressive entry, and it came to cost us. At the way bulls were still in. Then they managed to kick the market up, so we lost the trade. It was a GBP card. Then another trade that we lost this week, it's card Sechef. As we've seen here, Yep, as we've seen here, we entered here. Let me explain it because when we entered this, it was not here. So let me remove this to. So first of all, we had these consolidations here. Price have been consolidated between this monthly level of 0.660 and 0.690. Market have been consolidated here. Then after that, we see the market, this candlestick bullish managed to break this and come to retest as we see here. But on Monday, we got that this a bullish candlestick of the bullish engulfing. We got the bullish engulfing here. So new members, they know how to trade bullish engulfing, how we do it. We measure it from the lowest price or the lowest opening price, which is being shown on the. Then we measure the 40%. I mean 40% to 75%. 75 to 75%, which is this shown as on as it's shown here on this yellow rectangle as I shown here. So what I did is just come all the way to the lower time frame, which it's 4 hours. It's a 4 hour. We was waiting the price to come retest to this level so I can call the trades. Then what's happening? The price came like this, and this is the time that I called the trade. This is the time as I called the trade, but also as this price, it has already break this weekly level. And by that time, if I change this chart to the line chart, I can get this trend line. The trend line was here. The trend line was here. So this trade, it was all supported by the normal technical skills that I had. It was really supported that it is on bullish structure, and it's supported by this trend line. So I called the trade here a stop loss. We put it was 80 pips actually. Then the reward, it was 147 as we see here. But what's happening? The bulls didn't have enough momentum for the bulls. Bulls didn't have enough momentum. So what's happening? Market comes all the way down. First of all, break the trend line, but because we've already break that 40%, 75%, and then at the end of the day, as we see now, the markets break our stop loss 80 pips. So this is how we lose almost 208 pips on that trade this week. For CAD-CHF, it was not all about a mistaken. It's just like the price action didn't manage to be well respected. And what's happening is that the trend line have been broken, then bears kick in on the market, and by the way, we lose the trade. But others, as you see, there is technical mistaken, like aggressive entries. We didn't wait to be the latest people to enter on the market. At the result that we lose, our trade. So we've got a lesson, I think, from the future trades. Will be considering that thing. So it can be like that way. It can be like that way. But the trade which is still learning, we have USD CHF, which is still learning. We took the first entry here, then the markets come all the way down. We had this minor zone around this price. We had this minor zone around this price. The minor zone have been broken with this momentum candlestick as we've seen. Then the price tried to come all the way down, come to retest to this level, to these regions which for this week I called another trades, and that another trades, it went down, which give us the newest lower. Then today's, according to the fundamentals, it gives USD power. So the market come all the way up and took us in loss again. But in these 4 hours, as we see, bears are kicked in. They have been touched this monthly level 97.00. They've been coming to touch this monthly level 97.00, and we see that bears entered rapid on the market. So it shows that still this trade, it is on downtrend. So we are keeping holding it to see. So the first entries, we have already break even. Then this the second entry, we'll see another attempt. If we get the lower here, or this region will be broken, also we will break even this another second entries. So the another trade, it was CHF JPY actually. So this is the trade we took these areas. It consolidated for the days, then it's come to break this. It came to break this. It's come all the way to break this Kamina zone here, as we see it. And it comes down, but also the bears took it up again. So we are keeping holding it because it is on break even, hoping that maybe bulls may take this price up to here again, so that bears may enter it again. So we are going to monitor it while we are holding. So we have been remaining with 2 trades with the premium members. That is CHF, USD CHF pamoja na CHF JPYs. So as you've seen, this trade is it's not like it's a different sided because we are betting CHF JPY to be strong, but also we are betting CHF JPY to be weak. So the only thing that will matter in this trade is that we are expecting the JPY to be more strong than CHF JPY. So CHF can move USD down, but also JPY can move CHF down. So according to the price action, sometimes you get some things like this confusing, but you have to trust to the technical picture, or what the price action is trying to tell you what you can do on the market. So this is how it is. This is a market recap. I think it has been very helpful to you and to those to all the members. So also in this week, I've been getting a lot of people asking about the group intake of the training. As I said, that we'll finish that. I will finish our group intake of training on the March. So from now on, we'll do 1-to-1, but I think the needs of the people to do another intake of the group people, it's very, very high. So we are still discussing with my people I'm working with to see if we can have another group intake on May. So keep following us on our Instagram page, on our Telegram channel. So if we had any announcement about it, we will let you guys know. It's my great hope that these things have been helpful to you. So keeping hitting me on my all DMs, Instagram, in Facebook, in Twitter. I'm using Francisco Magnetics, and also Forex Money Industry on Twitter and Instagram. For any assistance needs or anything you need other services, please hit me up there, and it will be helpful, and I'll be grateful to help you on what you are facing in that trading. The coronavirus is real. I should tell you people to keep continuing being safe and take measures and all precautions that have been provided by the Ministry of Health, so you can be healthier. The good thing is that your business doesn't need us to be interacted with the people. You can stay home trading with your own laptop. What all you need is that laptop. You need phone. You need internet. That's all. So I hope for us we are real safe. So guys, keeping isolating yourself from the groups and all unnecessary gatherings, so you can be safe and make money. I'm wishing you good night. Thank you for watching this. Please don't forget to subscribe there and put on notification. So in case I have any other things I want to share with you, you'll be the first one to get it. Thank you and ciao.